Hi class. In this video I'm going to go over a couple of problems that are similar to the homework from chapter 19. So let's look at this one. It says Alfred Hurley and Thomas Estes are partners who share profits and losses at the ratio of 70-30. Their partnership agreement says that they each get a salary of $94,000. The salaries are paid to the partners during 2019 and were charged to the partners' drawing accounts. It says the income summary account has a credit balance of $340,800 after revenue and expenses are closed at the end of the year. Then what amount of net income or net loss will be allocated to each? And we've got a little chart here. All right, so the first thing you're going to do is start up here with net income. The net income is the amount that's in the income summary account because we would have closed out our revenue and expenses into that account. So that would be the revenue less the expenses. So we've got net income of $340,800 to split up. It says they each have a yearly salary of $94,000. So we're going to put that in there. Oops, if I put the right amount. All right. So after we do the salary allowance, this chart actually is going to keep track of that. So we had the net income of $340,800, and we've now allocated $188,000 of that as far as salaries. In the instructions, it says that they took those salaries out of the withdrawals. So those didn't show up as an expense to the company. They're actually owner withdrawals. So that $340,800 does not include those salary allowances. So we need to reduce the net income by the salary allowances, which is $188,000. And that gives us $152,800. So that's the amount that we actually have now to allocate at a rate of 70-30. So we're going to take the $152,800, multiply that by 70%, and it looks like Hurley gets the 70%. So he gets $106,960. And let's see. We had $152,800 less the $106,960. Looks like Thomas gets $45,840. So when you finish that, you should end up with the income of each partner totaling to the net income, which is $340,800. So let's check that, make sure I did my math right. So yours should look similar to that. Go through the same process, just use the numbers that you have. All right, let's try another one. Okay, so in this one it says Tommy Riley and Derek Victor are partners who share profits and losses at a ratio of 50-50. Then they decide that Victor will sell one half of his interest to John Lynch. At that time, the balances of the capital accounts are $252,000 for Riley, $352,000 for Victor. The partners agreed that before the new partner is admitted, certain assets should be revalued. It looks like those are inventory and a building. So we've got to make some adjustments to those. So then it says record the valuations in the general journal. Oops, if I can get it to scroll down. All right, so we're going to revalue a building and some merchandise inventory. So let me go ahead and plug those in there and then we'll do the math. All right, it says that the building had a book value of $132,000 and they've revalued it up to $228,000. So if I take the $228,000 and subtract the $132,000, that's actually an increase of $96,000. So we're going to write up our building $96,000. And our inventory started out at $205,800 and it actually dropped to $202,200. So it decreased $3,600. So we're going to actually credit that because we're bringing down that balance. All right. So the next thing we're going to do is we've changed the valuation, and this happens before we're going to transfer anybody's capital. So we've changed the valuation of 2 assets, and we're going to allocate that change to each of the partners. So Tommy Riley capital and Derek Victor capital. All right, so to do that, we're going to have to figure out what the change was, what the net change was. So that's $96,000 less $3,600. So we have $92,400 to allocate. That's just the net of those two things. And the instructions say that they are 50-50 partners. So we're going to just divide this reallocation by 2. We're just going to split it right down the middle. So each of those partners gets $46,200 of the reallocation. And let me make sure I did my math right. So yours should look something like that. And then we've got a requirement 2. That one's pretty straightforward. So we had Victor's balance was $252,000. I think that I could pick up the right one. Let's see. Oh, no, $252,000 for Riley. $352 for Victor. So let me fix that. All right, and then the revaluation gain, I've already forgotten what it was, $46,200. So you're just going to pick up that amount that you calculated in part 1, and it's adding that to their balances after revaluation. So let me again make sure I didn't type anything in wrong. So then when it says it's complete and correct, so we are all done. So that's just a couple examples from the homework. Most of the other ones are similar in nature to these two, so I think you can kind of follow the same pattern. If you have any problems, any questions, feel free to send me an email, and I'll be happy to help you. I can see where you're stuck. I can actually look at your homework and connect. So feel free to email me if you need to, and I can probably help you out. Have a great week.